Each day when I go to the screen, the question I look at is who's in profit. We're going to talk about that next, traders. Good day, traders. I'm Stacey Burke from Stacey Burke Trading. Beginning of the week, already the beginning of possibly some big moves this week. One of the first things I always ask myself when I mark up the screen, the charts on each pair, is which trades are in profit. Now, we went through this a bit last week, and I got a lot of questions regarding what do you mean by who's in profit. So there are existing trades that are in the market from either people selling it down or buying it up at the end of the session, at the beginning of a session, whatever that may be, that have not yet been either stopped out at break even or stopped out for a loss, meaning that that swing high or that swing low have been broken, or if there's existing profitable trades there, if the market has gone back to hit those stops. Remember what this is all about. The market will move from volume areas of liquidity to areas of liquidity. Now, retail traders, typically where the bulk of most stop losses are at the highs and the lows. You can call it support and resistance, you can call it swing trading, you can call it whatever you like, but in currency, in the currency markets, it's us against them. If you have been following me long enough, you know they go back and they hit most traders, whether it's on a stop hunt, a trend, whatever that may be. If you don't take money off the table, they're going to come back at some point to get you. Now, I've received some other comments about, you know, I've talked before about not holding positions overnight unless you're in a longer term move. And the reasons why that is because they widen the spreads. It's very thin. They can move the market as much as 100 pips up and down. So you can be trading on the end of day, but if you're leaving a stop loss in overnight or into the next day's session, in that rollover, don't be surprised if they come back and stop you out and pull away and move back in the original direction. There may be no volume there, not much for them to have any resistance to moving the market up and down inside of that range. But each day when I go to the screen, before I look at this after the Asian session, we talked about this. What do I mean by profitable trade? So if there's an existing short position where the market may have sold off in the US or in London, and it's still, if you were in the money still, meaning you hadn't been stopped out, that trade's still valid. So that's an existing profitable trade. The same thing would apply if it was a long position. It may be off the low of the day, it may be a swing long at the end of London or at the end of the US 12 candle window. But it's critical because those profitable trades, when the market goes back into consolidation, are now our upper and lower boundaries. So when we talk about high and low of the day, we may have a high of the day that's up here from yesterday's high. But at the same time, if this is the last lower swing high, then that area is the most recent significant high when we head into our next day's consolidation. Until that is broken, as long as that stays valid, that is still an area for a stop hunt or a breakout to occur, to either stop out traders or to break that level for a possible trend trade or stop hunt reversal. So again, we review our simple system, structure and pattern. Are we in a trend? Are we in a consolidation? Is it a rectangle? Do we have three big pushes? Is it a head and shoulders? Is it a descending triangle, an ascending triangle? Are we looking at a double top or a double bottom? So bigger picture geometry, because we talked about when the markets break out of those horizontal ranges, we potentially may now be looking at a measured move. So instead of targeting 50 pips, you may be in a 2 or 3 day move where the market may move 200 or 300 pips. These are where traders have the opportunity to sell high or buy low and hold that position for maybe 1, 2, or 3 days, being outside of where the market maker, the smart money, whatever you want to call them, will be able to stop you out. That's a different scenario. But generally speaking, holding a trade overnight, when they can whip it up and down and stop you out, you might be up 50, 75 pips, and all of a sudden you go to your screen, you've left your stop in at the rollover, and you're stopped out with nothing after all the work and stress and effort of getting into a profitable trade. So it's important to take a profit. High a day, low a day. So again, we may have a high of the day and low of the day for the next day, but this is the real box that we're trading in. And if we're at numbers and the market's trading inside, then that 25 or 50 pip box is an existing number level box that price is trading inside of. So we may have highs and lows around those numbers, but it's important to understand again the three things that markets do, right? They break out, they trend. They break out, they reverse and pull back and go to the other side, false break reversal. Or they break out, they pull back and they stay in a trading range. Because if you understand the number boxes, you'll see when there's a breakout continuation, it will layer on top of or beneath that 25 or 50 pip box. What's the difference between 25 and 50? Well, the market may be trading on a particular pair inside of 25 pip increments. The pound Aussie, the pound New Zealand, they may be trading in a 50 pip increment. So they break out, they might move 150 on that particular day. The pound yen may move in 25 and move up 75 and down 150. So it still meets its ADR, but it's moving in 25 instead of 50 pip increments. So you have to be able to identify that when you go to the screen. Profitable trades, high and low, round numbers, and then of course we start our timings with the 12 candle window. So if the stop hunt occurs or the breakout occurs prior to our 12 candle window, which would be the end of Asia or in that hour prior to the US session 12 candle window, that may happen. They're not going to do the same things at the same time every single day. If they did, they wouldn't be able to move things around enough and everybody would figure out their system. So again, understand it's them moving the market to trap volume and then hit the stops, trend the market and move it away from where that volume, the largest volume, is trapped, or to continue a trend. So timings. The 12 candle window allows us to narrow our focus down and really be laser-like focused around the high and the low, the round numbers, the stop hunt, the trap, the trade. So price action, engulfments and pin hammers. So remember, I had some really good questions about if you're up high and they break out and give you a pin hammer, why wouldn't you buy that? Because then you're buying high, or you might be selling low. We make money by buying low and selling high, or selling high and buying low. It's important to understand that they are going to give you bull traps up high and they're going to give you bear traps down low. That's the whole point. They are trying to trap you. We talk about if it's a trend trade, there still will be a stop hunt. There'll be a 1, 2, 3 into the trend, or there'll be a consolidation with 3 pushes against the trend for a continuation. That's why you need to print your playbook off. Each week you should be learning 1 or 2 variations of some sell high setups and some buy low setups and some trend trades, and just sticking with 1 or 2 really simple ones. If the chart's a mess and you can't figure out what's going on, why would you want to trade that? Don't be afraid to just step back. Remember, it's not about trying to figure out what they're doing and trade every move. It's about you identifying some simple setups from their playbook that you see each week, and then mastering those setups, confidently being able to execute your plan. I talked about what I like to do is when I have a scenario setting up a trade thesis, I look to limit order in at or near the numbers after the trade setup is confirmed. Sometimes I'll get in at market. It depends on, each trade is different. So again, repetition, 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 repetition. People focus on one simple goal each session in terms of your process. Have a couple of goals for the week and for the month in terms of your identification of trade setups, your confidence in understanding they're a sell day or a buy day, and then also being comfortable with it if you don't see anything setting up or you're not aware that there may be something setting up. Stepping back and just observing. There's nothing wrong with that. Don't be in a hurry to make a trade when it's 50-50. The 50-50 game will not work out long term. I can assure you of that. I can attest to that. But when you start to nail down on some 90-10 possibility type setups, you'll be amazed that when you get into these trades, how fast they move. And then the confidence just to be patient and do it again. Maybe a day, 2 days later, 3 days later. You don't need to trade every day. So, coming back to what we started with, we're going to look at today's charts as we head into the end of Asia to do exactly this. We'll identify the profitable trade setups. We'll look at our highs and our lows. We'll identify the round number boxes. And we'll look at how that market has set up as we head into the next few hours. That, for me, again, just peels back variables. So you have to figure out, if you're just going there every day with some indicators to catch a crossover or a swing on a momentum chart or something, if it's working for you, keep trading it. But for me, I want to be able to go back each day and make it so simple that all I have to do is say, is this a sell setup, a buy setup, or a trend trade? And then, as I said before, I have a choice to make. If I have a trade setup, basically I have a choice when it gets to numbers. Is it a sell or a buy? Put my order in, my 20, 25 pip stop, and my profit target, and that's it. That's how simple trading can be. So the other stuff in your head about being right, proving the market wrong, figuring out that you're smarter than the market and you can figure out every move, all that stuff is going to cause you grief later on. Make it simple, focus on the business of trading, manage your risk, target asymmetrical risk reward, okay? Keep it really simple, and then figure out what you did well, what could you have done better, if you made some mistakes or you read the market wrong, okay, what can I do tomorrow that will help me eliminate out some more of those variables? How can I make it my process so crystal clear that that's what I have to do? This is what I'm going to do. This is what I'm looking for. This is how I'm going to execute my trading plan. This is what I'm targeting for my profit. This is my stop loss. That's it. Walk away. Get better at it. Scale it up in size. So we'll look at today's pairs. We'll look at the profitable trades. We'll mark off the highs and lows. And then we'll let the market do what it's going to do. When they show their hand, that's when we can look at the screen and say, this is a breakout. It's going to be a trend day. Oh, this is a stop hunt for a false break reversal. They're trapping people up high or down low. Or it's just a trading range. And depending on how big that trading range is if it's 25 or 50, have they moved 50, 75 pips from a low or a high? Just keep it really simple. And then engulfments and pin hammers. If there's nothing in London, I'm okay, because if there's nothing in London, I know there's going to be something in the US session. They need to move the market in order to make money, traders. So be patient, be disciplined, find out on your charts, doesn't matter which instrument you're trading, identify the profitable trades. There's going to be a stop hunt, whether it's a trend, a false break reversal, a 1, 2, 3, 3 pushes, 50 pips, whatever. But there's going to be 50 pips today. So stay disciplined, keep it simple. Have a great trading day. It's the beginning of the week. Let's make this our best week. And again, thank you for all the comments, hitting the like button, and keep it coming. Let's you and I get better together.
Okay, traders, we're looking at the pound yen, and again, just marking off which trades are in profit. So if somebody was long from this morning's Asian session, this trade is still in profit. The trade that was short in the U.S. session 12 candle window from Friday, they've stopped him out or her out at break even, but obviously the high is still intact. We have a smaller rectangle that the market broke out of in that Asian session, and that, again, you will notice this was inside of a 25 pip box between double zeros and 75. That market has now since moved up 50 pips. So we could see this market stop hunt high and reverse off of the 3250 level, or break through and continue to move. So as we head into the end of Asia and the first part of Europe, how this market trades through this level will give us some insight as to whether or not we're looking for a reversal stop hunt back towards traders that were long from Asia, or if the market will break through this level and continue back towards the London session short trade. But you can see again these profitable trades, the market moves to stop out these traders. Now, this market potentially may find resistance at 32.50 for a move back down, not only to stop out traders, but possibly even to continue that move down. Pound Swiss, again, we look at profitable trades, structure. So we have a market that's broken out inside of the 25 pip box to 1750, pulled back, and then given a long trade, stopping out traders from the US session highs. Now, if you notice, we're inside of a box, potentially a 25 pip box that has had a 25 pip stop hunt, not quite 25 pips to get the US session trade, but now we also have a market that is potentially may break through this level for a continuation back towards the London session shorts. So we mark off these profitable trades, and again, we're inside of a 25 pip box, but this shows me who this trade has been stopped out. But again, until this, now the next level of liquidity will be somewhere most likely up above the 1800 level, or the market will trade up to that box where we found support. They broke through 1800 to pull back, so the market may trade up to 1800 and find resistance for a move back down. But again, we just wait for the market to show us what they're going to do. We know who's in profit. We know they're going to move from one level to the next. Whether it's a trend or a reversal, we'll find out. But we mark off those trades. Those are going to be the first areas that they move towards. In British pound, again, the market breaks through a geometrical box. So we had a swing high. Traders then went long this morning. They've broken above that high, which again you'll notice is a 25 pip box underneath 23.75 to 23.50. The market moves up 25 pips to stop hunt traders who were short in the US session. We have profitable trades from the London session high, as well as the swing traders who are just above the US session. So again, this market may pull back inside of the range for a move back down towards the Asian longs and possibly the low of the day. Pound Canadian, we had a reversal on Friday night, pulling up above the double zeros before going into a 25 pip consolidation, coming sideways at the end of our 3-hour Asian 12 candle window before again breaking higher, possibly a type 3W formation, so an existing long trend. This market could continue to move back up towards above 68.75. But again, profitable trade in Asia, profitable trade that was in the US session heading into the close. They've since hit those stops. The next level of liquidity would be up above the 68.50 level or below, or at break even. I've already got him, but at below the 6800 level. Pound New Zealand, we had long traders from Friday night's US session 12 candle window. The market gapped this morning, stop hunting traders who were short in that continuation in the London session before pulling back, swing traders shorting the engulfment into the Asian 12 candle window. So we have swing high stops around the 92, 95, 9300 level. The market is inside of a 25 pip consolidation. And we have existing long trades at the 9200 level. Short traders in the pound Aussie on the open this morning, again on the engulfment, similar to the pound New Zealand. So traders have entered in on the engulfment into the 12 candle window. We had swing traders that were long in the US session close that have since been stopped out. But we have longs off the bottom from the US session open 12 candle window. And we have traders that are short from this morning's Asian session. So again, the market has dropped down 75 pips at this point from the high of the day. We may find support at this 8,000 level, but we have existing profitable trades from this morning's engulfment and from the US session 12 candle window. This allows us to have some insight in terms of the directional bias. If the market is broken below the double zeros, it's currently working the low of the day. They'll either find support on a retest on the double zero bounce or a stop hunt down low for a move back up to the high, or the market may stop hunt high, getting traders at break even for a retest down to the low. But again, these are the existing highs and lows that the market has respected and remain intact.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburktrading.com. I create updates on almost a daily basis and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined and may the markets go with you.